Hi and welcome to the Market Alert for Wednesday the 16th of February 2022. Just before we get into the Market Alert, for existing subscribers who have noticed there's been an upgrade in the software, if you come into the Omni Predictor membership site and then you've got the home there where you've got the welcome. If you just scroll down, you will see tutorials. If you left click on this will take you to a whole set of videos that show you exactly what the upgrade indicators are and how to actually use them. And then below this you will find, as you saw in yesterday's alert, many trading examples of the software in use and how I actually use the indicators in order to take trades. So there's lots of examples of that as well, which will be added to. And yesterday as well, also positional trades were added to the silver, which I will talk about later at the weekend. I'm going to do a Saturday market alert this week just to show you how I legged into the current shakeout in the silver market yesterday. Okay, so let's get on with the usual stuff. And crude crushed, which the bankers in the silver market took advantage of, sending the price down $1. Stock surge, Bitcoin bid as US Russia tensions ease. Well, we'll wait and see. It might just be a one-off. And more importantly, for me, US producer price inflation expected remains near record highs in Jan, and that was one of the reasons for legging into the silver trade, like I say, which I'll talk about later on in the week. As it's a positional trade, it doesn't really matter, but I'll show you how I did that, and I'll add it to the live videos section as well. News today, important one for the UK, 7 a.m, which will be out before the market alert is, unfortunately. CPI numbers 5.4. I suspect they're going to come out a lot higher than that. If not, then it will again prove the manipulation of these numbers. Got retail sales from the US and industrial production, crude oil inventories as well, which would be interesting. And the other big one for the day, of course, which I nearly forgot there, FOMC meeting minutes as well. They're released at 7 p.m. GMT. See what they have in store as well. So the market might be quiet this afternoon after the initial opening of the Dow. So let's have a look at the Dow. Let's see if I can find it. A lot of charts to get through. Daily chart of the Dow managed to actually close near the highs yesterday as well, which is quite amazing, closing above the 20-bar moving average and looking a bit bullish overnight at the moment, although not a lot of activity, I might say. So we might get a bit of pickup with the UK inflation. We're certainly waiting for any surprise announcement from the Fed. Talking of announcements, nothing came of the emergency meeting that they put out the other day, so I don't know what happened there. Rates were never changed. Maybe the emergency isn't such an emergency after all, and they probably wanted the PMI numbers from yesterday. Who knows? But there was no announcement, so it'll be interesting to see tonight if there is anything. I doubt it, but you never know. So yeah, in order to move higher at the moment, the Dow needs to take out these fibs and the 200 MA as well, which causes a bit of a resistance there at the moment, but certainly moving towards the upside. Yesterday the market was at the 62% retracement, and then if you move into the smaller time frames, you will see this is the pre-market session for the Dow. I'll just move over here, and from here to here overnight the market comes back to 62% retracement here as well. The market's oversold. The momentum had gone to the downside. We've also got a small retracement inside of here of 76%, or sorry, 78, 89%. And then prices show demand as well, and some other buying there in green, all green there. And then as soon as we kicked off with the German DAX, the futures moving sharply to the upside there, and then just staying on the highs for the session. When it opened, the cash market opened, prices were sent down sharply, 200 points, then a straight reversal back 150, traded sideways, and then just the volatility dropping off until we got towards the close, where the plunge protection team, by the looks of it, brought the market back And at the moment we're trading above the close, the 50 bar MA. The 5 is above the 20 there as well, as we're starting to move to the upside. We are getting towards overbought though at the moment, but early hours of this morning we see demand coming in as the market's being moved to the upside by nearly 100 points, about 80 points at the moment from this BRN, heading towards this one here. In the German DAX, we've got a similar situation. Yesterday the market finding support at 78%, just about trading through the 78% there at the moment. Again, price is closing above the 5 and the 20 bar MA. We've got a problem in this market at the 200 MA, which ties in with here where we had the last shakeout, and the market also has the 89% retracement drawn from here projected back to here as well. So if we get through the 78, we have to take out the 89, and then we've got the 78% retracement, which was drawn from here back to here, so that also needs to be taken out. There's an 89 above this as well in this area, which is always near, spotting an 89% retracement is quite easy because it's going to be near the lines either up or down that we draw these from. In the 30-minute chart, not too dissimilar from the Dow either yesterday morning. From the low to here, again you can see that we came back to 62%, the golden ratio, and then again back here we come back to 89 in this low, the market opening and moving sharply to the upside as well. Looking at this in a bit closer time frame, like a 5 minute, again you see exactly the same thing, and you see the demand in the smaller time frame, again oversold, all of the conditions, DP where the market is, and then we close back above the 5 bar moving average, the parabolic changes, the stochastics cross. The market's a bit violent to begin with on the open, trades down, but as soon as it closes back above, it also closes through the 200 MA, which had been a resistance for this market, and that's the first time it goes through. As you can see there, last time it hit it at the 200 MA, we had supply, we switched crossover, and the market came down and completed the oversold conditions, and then was ready to move to the upside, which we see this happening there, and just continuing to move to the upside there. Oversold in this area here at the R1, but the market wasn't finished on the upside. The price is trading sideways, something you want to observe in a bull market where prices are sideways with red bars. If they're not moving lower, then there's got to be some sort of lack of selling, and the market then moves back to the upside. This time we get a move to the downside, a bit of a move, and prices then find the R1 as support before again being oversold, demand, crossover, and price is then free to move back 100 points on this move. And then the rest of the session the market just traded in a 50-point range, but again still conforming to the pattern, but very choppy afternoon, frustrating afternoon as the market traded sideways there. And in the, let's just see if I can find these for you. We've got the GBP-JPY. Again, the market came down to 89% on Monday. We looked at that. The market yesterday, a nice sideways move, and at the moment trying to move to the upside. When we look at the US dollar in a moment, you'll see white. Need to take out that 38, 50, etc., moving back up towards the 89, so bullish at the moment. In the 30-minute chart, also coming off an oversold situation here at the close of yesterday, which is where we've got some support there, and price is just getting through the 200 MA. However, if we go from here to here, we'll just see that just through the 89% retracement from there, drawn back to there, we need to take out yesterday's high as well. And if you wanted to go into a smaller time frame to see what's happening, you can see that the 5 is oversold at the moment, and heading back towards the highs. But again, we've got UK inflation out shortly, and that's going to be relevant to the pound, which again you can see also coming off that 50 MA 89% retracement on Monday, with the same, more or less same set of fibs that need to be taken out to the upside. This is likely to be treading water. Again, you see actually it's moved up quite nicely there off the 200 MA and yesterday's close after being oversold. So the market is anticipating at the moment for a great a higher number for the inflation, again increasing interest rates, etc. So that one will be interesting as well. So look at the 30-minute, moving towards the upside there as well, confirming what we're seeing. And then of course we've got the still waiting for the news, which is another 15 minutes away as I actually record. And then finally a quick look at the commodities for yesterday as well. Very interesting day. Silver was slammed, came back to 78% retracement. I bought in down at this level, and hopefully the inflation numbers will continue to rise and we'll see silver price head back up. But they just couldn't help themselves yesterday. As you can see, it was just sold off. I thought we were going to get to $23 down here, but we didn't. But as soon as we got this demand coming in, we were oversold. It was just too good to miss, so I added another position there. I will try and get the stop to break even on this one, more so than the other trades that I have, all the way down to $13. But at the moment it's looking like we're going to move back to the upside. It's all going to depend on the CPI numbers, which will be out shortly. We also need to take out that 200 MA, which you can see has become a bit of a resistance area once broken there as well. So again, a bit of a market overselling here. Demand, crossover, moving prices back to the upside as well for a re-entry on the long side there as well. In gold, also slammed yesterday and coming a lot stronger than silver, only trading down to the 5-bar moving average, where silver was sent straight through. So again, no surprise there, because silver is easier to manipulate than the gold market. So the only thing I can do here is click twice on the top of this bar, and this gives me the fibs to the upside, because I haven't got any other way of marking this up, because it's the high and the low of yesterday's. But there's good targets nonetheless. So what we're basically looking at are the fibs for the range of this bar from low to high, and how the market will react going through these, unless of course it decides to go south and the CPI numbers are no threat. Then I would use this set on the downside, which obviously the 62% retracement, the golden ratio, ties in with yesterday's low, which is interesting in and of itself. And in the dollar, this starting to move low, which is going to support the metals markets in theory. And crude oil got hammered yesterday as well. So have a look at the 30-minute chart, coming back to 78% retracement in the daily there. Just get rid of that 62, so we can see again a bit like silver, retracing 78% retracement short term. Crude oil was hammered lower, and that's why the silver price was hammered as well. They took advantage. They moved in tandem. It was quite interesting to actually see. There was divergence here between here and here. Let me just redraw that. So prices were lower. The divergence came in at the previous day's low, 62% retracement in the daily, 62.78. There's the 78, so down towards that 78, and again oversold. And then we've got the low as well. They'll always target the low and try and bring it back. Get your cluster of volume at the low, market sideways, turns back to green, and now moving back towards the upside there. Any more potential warmongering between Biden and Putin will see the crude oil market move back to the upside. But don't forget, we've got the crude oil inventories today as well, which I think they were expecting a bigger draw on the numbers. A shortage there of minus 2.2. or a drawdown of minus 2.2. So there we go. Right, that's it for this one. Let's see what the inflation numbers are at 7 a.m. And with that, as ever, thanks for watching. See you in the next one.